In this video, we are going to be analysing the Walt Disney Company for Disney, so ticker DIS. Now, they have just had their earnings. Wasn't really as good as expected. I mean, if you want to go into their earnings, you can, but not all that great, or not, at least not as good as the market was pricing in. So obviously we have sunk on that news. We did push down over kind of 7% on this news. Now what you would have seen, and this is just one thing I wanted to note, because you do see this not all the time, but we are starting to actually see it a bit more common on these stocks. They report earnings, sometimes you get that fake out. It's a bit more risky playing that move, but waiting for that direction. I mean, if you're seeing it fall down to 94, you know that's most likely the direction. The market's not taking it well. And it also gives you that few minutes to kind of read through the report if there's anything you wanted to check if you're not trading off the price action alone. But what we have been seeing a bit more recently on a few stocks is you get this temporary retest of basically the pre-earnings news price, and then it flushes back down. So these are one of the things to observe, because if you can get some orders out there, it's probably going to hit this and just continue that downtrend, and that is usually a really good risk to reward trades, because you have a target off the bat. You can have, obviously the stock's going to be a bit more harder to dictate. I guess you could just have the intraday high, risk about a point or two, but you're looking for about 5 to 6 point upside. So just one thing I wanted to point out, I've been seeing it a bit more and more through this earnings season. So especially going into next earnings seasons could be a good thing to be watching out for, because again, you can get some definitely good trade opportunities. Now though, onto the actual levels that we're paying attention to. What did we want to note? So we are currently coming into our statistical mean on the 6-month chart. This is at $93 and around 90 cents. So if we go to that after hours chart, you can kind of see this is where we start to slow down, and this is why these deviation levels are so key, because these can give you targets. If you're playing the earning news off the bat, you can just trade it to a deviation, and then once you come into that deviation, that could be your target. And then the reason we would usually get out of here, because this is where you'll see, if you check volume, if you're a level 2 trader, however you kind of judge the slowdown of momentum, you'll tend to see that slowdown kick in quite big, to a big effect, usually around these deviations. So deviations is just one way I can easily do it without having to look at multiple different sources, and it just makes it like an easier way to do it. So that would be kind of just a level to know, and how I would note it is, where do we open up tomorrow morning? If we open up below this kind of $94, that is a good indication this price is accepted and we're going to kind of do a gap and go. On the other hand, if we open up above $94, this is going to show maybe it was a bit more of an overreaction, and it would be riskier to trade that gap and go in the morning. So that's another way you can use these levels to kind of be a filter on the trade, so you don't get stopped out as often, and you can just increase that overall accuracy. Now that if we start to continue down, we do have a next support, that 89.70. Now this is basically going to be that 52-week low. So coming through here, this is going to kind of be its final layer of support. If we break through this, really we are most likely going to flush, because there is no support really in sight. And really the only support we have going lower is at $78, which is going to be our first deviation on the 6-month chart. Now this is where I'm personally looking more for Disney. Probably look to take some trades on it, but definitely on the investment portfolio, I am being a bit more patient across the market. And this is going to be that level where I will start personally be looking to start getting some size in Disney, more for the long-term outlook. Now, if we continue down, we are looking then at $67.30. Continuing further will be $63, and final levels taking us to around $48 and $45. Now, onto the upside, if you want some more resistance levels, what are we paying attention to? So 108/1012 going to be our first deviation of both the 6-month and the 1 year. Going to be some strong layers of resistance, but really the way we tend to use this kind of level, we can see it's still relatively near to where price is now. So this tends to be on if we see some sort of good news come out, but may not have a massive effect on long-term profitability. That tends to be where you get that spike to, and then you tend to see it start to sell off or cool down coming into that level, because investors have realized, okay, it's good news for the company, but again, it's not going to have a massive effect. Is it going to justify a 10% increase or 5% increase in shares? Probably not, and that's where you see that cool down. However, if you start getting some more really good fundamental news, which is going to kind of change the profitability, then that's where you start looking at these higher out deviations, because again, 68% of the data will trade within these yellow deviations. That is our first deviation. So if it's kind of pricing or standardized news, that's kind of where we would expect it to trade within. If we're getting some more anomalies on the news, then that's where we look to trade out to those second or third deviations. So 24.50 is going to be that level. Going through there would be 34.50, 140, and a final level, kind of final key level at 156. And then we do actually have one final level at 180, but very far from where we are now and not something we'd be really too focused on. So now we have provided you with a lot of levels here. Now, do you need to pay attention to all of them? No, that would be confusing. All you need to do is really pay attention to where we are now. We're currently sitting at around $94. So really the only thing you're paying attention to, again, we're probably not going to get a massive move now. The overall big move from the earnings release has happened. So really it would be something waiting into the open and then seeing what side of this deviation do we open up. If we open above it, again, it would be something I probably wouldn't be looking to trade. It's going to be in a difficult location to trade because it may still do a gap and go, but it's going to be a lower probability and it could just kind of be a bit of a pullback day. But again, it's going to be hard to judge, something I stay away from. On the other hand, if we end up opening below this $94 or $93.75, that is a good indication that we are going to do a gap and go. And obviously, if you don't know what gap and go is, it just kind of means you open up and you carry on in the direction that we've gapped. So in this case, obviously, continue downwards. So that's what I'd be looking out for. And if we open below that, then your target's going to be around $90 on the day, and that could definitely be seen just within the day, depending on how many sellers are still looking to go. Because don't forget, a lot of stops are going to trigger. They don't trigger after hours. And that's what I mean is going to be key. If we open below this 93, kind of $75, $94, this is levels institutions use. So if it's coming into here, and some of them were maybe long biased, buying that bottom, thinking it was a bottom. Some are going to have that below that candle low, obviously, but some are just going to have it below that statistical mean. So you will probably see stop triggers, and that's why we would do a gap and go as well if it opens below that level, because again, they're going to trigger if they're below that level. So that's one key thing to know. That would be our level, and if we break that, then in time our next level would be $80. On the other hand, you only really need to be paying attention to the upside target of 108. If we open up or below, again, that's still going to be our closest upside target if you're more bullish on it. And yeah, if we can come up to this level, either test it and start to fade, again, depending on how you trade them, that's all up to you. You can look to trade the initial fade down, or you can wait for that break above, come back to test it as a support, and if it holds, that's a good indication you'll move to the next level. In this case, that wouldn't provide much upside from around 109 to 1012. It may be safer to stay out and instead wait for that retest of the 1012, break over, come back to retest it as a support, and if that holds, then that actually provides a much better trading opportunity, because then you have a target of 124. So you can see that would give us a rough move of around 11%. Obviously, you're not going to capture most likely the whole move, so we're looking more for around 8% or so on that move. But again, that is a quite not an easy, but a way to be looking at these stocks. So again, a lot of levels provided. Don't pay attention to all of them. Pay attention to where we are now. Key focus is where do we open tomorrow? Below 94, gap and go. On the other hand, I probably would be staying out if it opens above $94. Wait to see what happens, and then if you have a strategy, or if you have a strategy to trade it, then do so. But otherwise, if it opens above 94, be something I'll just be patient on. I have been patient on it the last few months. And I will continue to be patient on it until it comes into a better buying opportunity level, because there is a lot of opportunity elsewhere in the market. There's no point forcing trades on certain stocks. That's the power of trading the stock market, is you have over 2,000 or however many stocks are to trade from. Anyway, I hope you enjoyed the breakdown on Disney. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.